Hello, fellow traders. 'Tis I, the Rumpled One. It's December 1st, the year 2017. We start the month and we wrap up the week. Well, let's just get right into it. No need to waste time with chit-chat. As we can see, the euro-yen broke above the last week's high. That one simple trade could have netted you a boatload of pips. Simple horizontal line trade. Now, I had a question and a response yesterday. The question was, actually, maybe it was yesterday, about opportunities. When I had the video talking about opportunities, and somebody's like, well, do you like scan these things overnight? And it's just like, no. Everything I do is real time. I don't need to scan overnight. And I said, he's like, well, how do you pick? I go, well, once again, I use my dashboard indicator set up. You know, it's got over 100 functions. I can't even remember how many. But it can pretty much accommodate any type of trading that you do. So, for example, here, beginning of the week, I'm going to look for weekly crosses. So anytime I see these numbers down around 5, then you know you're ready to have a weekly cross. That's close minus open. If it's in, but plus or minus pips. And then the gap, well, it's all filled now, but this will tell me if there's any open gaps. I see that opportunity. And then the wick zones here, the daily and the weekly. As you can see here, it crossed above the high. But it crossed below the top on the daily. So this is just one. Now, if we switch over to this chart, we've got close minus open, high minus close, and close minus low. So that tells me in real time where price is in relation to the daily open, the daily high, and the daily low. So you can see here it crossed above the high. So there was a trade good for over 20 pips if you took it on the breakout of the upper wick zone. And here it came back through the daily open, so there was a chance for a daily open crossover or a buy zone cross trigger. In fact, we can look at, let's see, where is buy zone? Buy zone right here. You can see here, there was a trigger there, you might have gotten wiggled. And people, this is what they like to say, see, you get chopped up. Well, yes, if you don't know how to trade, but if you held tight there, if you wanted to, right there, you might have taken the hit, or you might have reversed at the open, but you're not going to win every trade. But here you can see it paid off nicely, and once again, it paid off nicely. So even if you had taken a hit, taken a long hit and a short hit, you would have made it up the next time. So there you have it. So this is how I find my opportunities, because if I know it's near the higher or the high or the low of the day, I know I have a rat zone possibility, and I also know I might have a wick zone possibility. It just depends on where it is. So as you can see here, let's look here. The Aussie yen. You can see here it's 2 pips off the daily high, so I would have a red rat opportunity if I wanted to trade that pair. So that is how I find it. Once again, real time, I use my dashboards, and There's so many other things functions that you can put on the dashboard to find, the types of opportunities that you are looking for. It's just, this isn't just made for me, it's made for everybody. Trying to give everybody, one tool that can help them. So rather than having to look at all these different charts, I can look at the dashboard and then pick whichever charts I want to trade. Okay. So the other reply was very interesting. This guy said something about you need lots and lots of knowledge and skills and experience and to trade. And I said, well, I don't really agree with that lots and lots part. I mean, you just need to master just a few fundamentals. I mean, if you have if you can use one method. And then he replied something to the effect that, yeah, but no method works in all market conditions. And so I haven't replied to him out on the thread yet. But the funny thing is, and maybe this will be my reply to him on the thread, price has to range. Price is going to move away from the open, either up, down, or both. And price is going to reverse off of the daily high or low. I don't care what the market condition is. I would assume this person probably uses squiggly lines and has had failures with those squiggly lines. And that's why he has to talk about having all this knowledge and having, all that other stuff. I think he's bought in to all the trading myths and the traditional trading education, which is filled with voodoo and garbage. That's just my opinion, okay? But I back up my opinion with fact, with evidence, with statistics. I tell you the types of trades I do. You know what I'll do beforehand. You know that if price is in the wick zone, I'm going to trade the breakout of that wick zone. If price is near the open, I'm going to trade the crossover. If price is within 20 pips of the high or low, I'm going to do a rat trade. These setups are known beforehand. I don't have to tell you. You can use the indicators I use, and you can see them for yourselves. I don't know how much simpler I can make it. I really don't. But some people, they believe what they want to believe, and that's okay. I'm not going to... I state my position. I back it up with evidence, and then that's it. I don't have to defend it. I don't have to prove anything to anybody. I used to do that in my younger years. A lot of time was wasted. For those of you who've been following me since the early 2000s, you've known the battles that have raged on the various forums, most of which banned me. That's just the way it is. But I don't care anymore. I shouldn't have cared back then. So I hope that answers that reply, because you see, it doesn't matter what the market condition is. When price opens, it's either going up or it's going down. And if the market is active, if you're trading a pair that's active and slightly volatile, you're going to get these trading opportunities every day. Every day. I don't care what the market condition is. The only market condition you're not going to get a buy zone trade is when the market's closed. That's the market condition. It's just that simple. Because if trading is active, and the pair is being traded by traders all over the world, it has to range. and it's going to range more than 20 pips. If it ranges more than 20 pips, it's going to come outside of the buy zone, either one side, the other, or both, because you cannot fit 21 pips in a 20 pip box. That's simple. But since we know these ranges are usually 50 pips or more, it should be obvious that there's money to be made using the buy zone. And on that same token, if you look at the end of the, let's come back to here, you can see here, this is high to close, close to low. The ones that are in gray are greater than 20. So if you traded within 20 pips or the high or low, you can subtract 20 from these numbers, and you can see how many pips you would have made trading the rat zone. Case in point right here. So put in the top. There's the trigger right there. And 17, so you'd be up, what, 31 plus 17 is 48 pips. And you could have probably added another 20, so you could have had 50 pips. Boom, right there. This is what happens. And right now, if you had taken the long somewhere here, the last trigger, 133.66, you'd be up 5. I mean, this happens every day. I don't care what the market condition is. So, you know, those people who say you have to be able to identify the market condition, yeah, if you're using squiggly lines, you just might have to. Or if you're using some of that other voodoo chart porn, that, you know, you've drawn all these lines on the chart, you got so much stuff on the chart, you can't even see the price. I mean, come on, guys. Look at my charts. Can you see the price? 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 You know, can you see the price? Oh, yeah, pivots. I wanted to show something about the pivots. There's a pretty cool indicator out there. It's called SDK pivots. Of course, I had to modify it. I added a few cool features to it. So not only will it do the daily, but it also put in the weekly and the monthly. And you can see how price reacts around the pivots. I'm kicking myself yesterday because I missed a trade. And the trade I missed was right here. 111.80. That was the pivot. The yen loves to hit the pivot. I knew that, and I missed that opportunity. All I had to do was put on a buy. I could have put this trade on here and said, hey, it's going to hit that pivot. And I missed it. I just missed it. Not only that, you know, what can I say? I missed it. And then, of course, it has reversed from that point. And the rest is history. And so here's the pivot again today. You see here it opened, it came and hit the pivot, and then it reversed. The yen likes to do that. I mean, it's very few missed pivots on the yen. But anyway, even with this, you can still see the price. Here, you can still see the price. And once again, just doing price action trading, you can still see the price. Fellow traders, just remember, it's not what you trade, it's how you trade it. That's the weekly wrap up. So I'm going to go and start to enjoy the weekend. And I'll catch you guys next week. TheRumpledOne signing off.